Now we are moving to the time of our next speaker. May now I invite Keynote speak Mr. Teck Principal Consultant, ASEAN Public Policy Asia Advisor to present the keynote speech on their governance in Fintech, legal challenges and opportunities. Please welcome.
A very good morning, ladies and gentlemen, Professor Lin. It is truly privileged to be standing here at the ACET 2025, surrounded by some of the brightest minds here shaping ASEAN Digital's future. So you know I always say that the conference isn't just about academic papers or PowerPoint slides, it's about purpose, research, share, connect, and that's what ACET stands for. Now let me start by asking you a simple question. When you think of fintech, what's the first thing that comes to mind? Is it payments, lending, crypto wallets? Maybe that buy now, pay later app that seems to know you better than your spouse? Well, most people think about the applications, the visible side of innovations, but I want to take you deeper, beyond the apps, beyond the buzzwords, to what I call the architecture of trust. Because beneath every fintech product you use, whether it's a digital loan, an insurance chatbot, or an investment platform, lies something invisible yet absolutely essential, and that is data. And data is the DNA of trust. Without it, there's no algorithm to store your credit, no ledger to record your payment, no compliance report to prove you did things right. So let me ask you this. What ties a flood detection system in Cambodia, a language AI model in Myanmar, and a mobile banking app in Jakarta together? The answer, and it's the same across every single project you've heard about this week, is data. So data fuels everything we do. It's the raw material for those kind of polarity classification models, the energy behind PM 2.5 air quality forecast, and the foundation for Internet of Things flood warning systems. Now, take that same principle and apply it to finance. And suddenly data becomes more than an input, it becomes a transaction itself. In fintech, data is identity, is collateral, is creditworthiness, is risk, reward, and regulation all in one. And that's why when we talk about data governance in fintech, we are not having a side conversation about company compliance or privacy notices. We are talking about the beating heart of an ASEAN digital economy. Now here's my central message to you today. If ASEAN is truly to become a $2 trillion digital powerhouse, we must learn not only to innovate fast, but also to govern smart. Because governance is not the enemy of innovation, it's the launch pad for responsible, sustainable growth. So when we've got governance right, we build confidence, and then when we build confidence, investors, consumers, and innovators all lean in. That, ladies and gentlemen, is how data turns from disruption into distinction, and how trust becomes the most valuable currency of our fintech future. Now let me start this next part with a simple number. $839 million. That's how much fintech companies across Southeast Asia raised in just the first 9 months of 2025. Now, pause for a second and let that sink in. Think about what was happening globally at that time. Inflation, interest rate hikes, investor caution everywhere, and yet the world's capital still found its way here to ASEAN. Now let me ask you, why is the world betting on ASEAN? Because they see something extraordinary. They see energy, resilience, and a region that is building trust in the digital economy faster than anywhere else around the world. But let's not stop at $830 million. That's just a teaser. By 2030, ASEAN digital economy, from e-commerce to digital payments, from logistics to lending, is projected to hit $1 trillion. And if we get our frameworks right, especially under the ASEAN Digital Economy Framework Agreement, or DIFA, that number could double to $2 trillion. Now here's a question for you. What does $2 trillion really look like? It's not just a statistic. It's an opportunity flowing through every village, every startup, and every smartphone. It's digital loans reaching small vendors in Yangon, instant remittances helping families in Manila, and cross-border investments linking Singaporean capital to Cambodian entrepreneurs. This isn't market growth, this is a tectonic shift, a once-in-a-generation transformation in how we define value, risk, and inclusion. And at the heart of this revolution sits one simple word, Fintech. So what makes Fintech so powerful? It's not one technology, it's a fusion of many. It's AI analyzing your spending patterns. It's machine learning detecting fraud before it happens. It's peer-to-peer platforms lending to the unbanked. It's distributed ledgers creating transparency in transactions. It's smart contracts thrust into one. So what connects all of them? Every single one is data. Without data, the algorithm is blind. Without data, credit scoring fails. Without data, there's no inclusion, no trust, and no growth. So data is no longer just another business asset. It's the new critical infrastructure of finance. Think of it as the digital scaffolding holding up the entire fintech building. So here's the real question we must all ask ourselves. If data is the foundation of finance, who's governing that foundation? Because if we build skyscrapers of innovation on weak data governance, one breach, one misuse, or one cross-border conflict could bring the whole structure down. That's why today, we are not talking about compliance for compliance sake. We are talking about data governance as strategy, as the master plan that decides whether ASEAN becomes the world's most trusted fintech hub or just another study in lost potential. And when I say governance, I don't mean another checklist or audit form. I mean a living system, rules, responsibilities, and ethics working together to make data safe, protected from misuse and theft, high quality, accurate, complete, and reliable, compliant, aligned with every jurisdiction law, and available, ready for innovation, not look behind from afar. That, ladies and gentlemen, is what true data governance means. It's not the handbrake on fintech, it's the steering wheel. Because in this race toward the $2 trillion digital economy, the winners will not be the fastest, they'll be the ones who can drive with trust. So, let me ask you something. Why ASEAN? Why is our region, stretching from the Mekong Delta to the islands of Indonesia, so uniquely poised, not just to join the fintech revolution, but to lead it? Let's break this down, because this is where our real strength lies. First, look around us, not just in this room, but across our entire region. We have young, energetic, and fiercely digital population of over 660 million people. And here's the thing. Unlike Europe or the US, where users migrated from desktop to mobile, we in ASEAN skipped the desktop era altogether. We went straight to mobile first. So what does that mean? It means that we are not dealing with passive tech users, we are dealing with digital natives. People who expect instant payments, one-tap transactions, and seamless user experiences. Have you noticed how in our region, if an app takes more than 3 seconds to load, users delete it? That's the level of expectation we are working with. Our diversity of languages, cultures, and habits might seem like a challenge to developers, but to fintech innovators, it's a gift. Because if you can build a fintech solution that works in ASEAN, multilingual, multicultural, multi-jurisdictional, you can scale it anywhere in the world. So here's the takeaway. ASEAN isn't just a test bed for innovation. It's the ultimate stress test. So that makes our digital ecosystem better ready by design. Now here's the second reason ASEAN leads this revolution. Fintech is solving real human problems here. Let me ask you, how many of you know someone who doesn't have a traditional bank account but has a mobile phone? Almost everyone does. Across ASEAN, hundreds of millions remain unbanked or underbanked. Not because they lack ambition, but because traditional banking never reached them. The nearest branch may be hours away, or they lack the right documents, or their income is informal. Fintech has changed that story. With mobile wallets, micro-lending apps, and digital IDs, people can now access
financial services with just a few taps on your phones. And here's the magic. This transformation is driven by data. Alternative data, things like mobile usage, e-commerce history, or utility payments, helps determine creditworthiness where traditional banks saw only risk. Let me give you an example. A street food vendor in Bangkok who pays a phone bill on time every month, that's a data point. A ride-hailing driver in Manila with consistent ratings and daily earnings, that's another. Put those together and suddenly you have a digital credit profile strong enough to qualify for a loan. And that's what I mean when I say data governance isn't just commercial, it's humanitarian. It empowers families, supports small businesses, and builds a more inclusive ASEAN economy. Fintech, when governed responsibility, doesn't just give more money, it moves lives. Now the third advantage is one that's overlooked, often overlooked, our geography. Have you noticed how ASEAN geography forces us to innovate? We are not one big landmass in the EU, like the EU. We are islands, rivers, mountains, a region of stunning complexity. To connect a fisherman in Cebu with a payment platform in Singapore, and to move money from Jakarta to Vientiane, you need serious innovation and serious governance. Because when you operate across different jurisdictions, currencies and legal frameworks, you learn fast how to build systems that are flexible, resilient, and adaptive. In other words, complexity has made us strong. ASEAN fintechs are solving problems that Silicon Valley never had to face. Last mile connectivity, fragmented regulations, and linguistic diversity. So let's take a step back. If we have the talent, the demand, the inclusion mission, and the creative pressure of geography, what does that make us? It makes us the most fertile fintech ecosystem of the world. But here's the catch. Having great coders is not enough. We also need great governance of data. Because no matter how brilliant your algorithm or how elegant your app, without proper data governance, ethical, legal, and secure, your fintech can't scale, can't gain trust, and can't last. So yes, ASEAN's strength is diversity, energy, and innovation. But its future, its $2 trillion future, depends on one thing above all: how we govern data that powers it. So we've just explored ASEAN's incredible potential, the youth, the innovation, and the momentum. But as every lawyer in this room will tell you, every opportunity comes with its own set of legal headaches. So here's the reality check. If the opportunity is the fuel of ASEAN fintech, then regulation is the terrain. And right now, the terrain is rough, uneven, and full of problem potholes. Let's call it for what it is, a regulatory patchwork. Now let me ask you a question. How many fintech founders quietly ask themselves, if I comply in Singapore, am I safe to operate in Thailand, Vietnam, or Indonesia? The short answer is no, not yet. The longer answer, it depends on how many lawyers you can afford. ASEAN does not yet operate as a single unified legislative bloc. We are, legally speaking, 11 beautifully complex jurisdictions, each with its own definitions of what constitutes personal data, consent, or data transfer. In Singapore, the Personal Data Protection Act, PDPA, sets a gold standard: clear principles, strong enforcement, and alignment with international norms. But elsewhere, we still see fragmented sectoral rules, one law for banking, another for telecoms, and sometimes none at all for our fintech startups handling personal data. So imagine being a fintech entrepreneur trying to expand regionally. One country tells you store your data locally, another says transfer it freely but get explicit consent. A third asks for government approval before export. You end up building 3 versions of the same app. One for Jakarta, one for Manila, and one for Phnom Penh. Not because of users' needs, but because of legal incompatibility. That's not just inefficient, it's unsustainable. Now here's a practical scenario. You run a fintech startup in Jakarta, your credit algorithm works beautifully until you try to launch in Phnom Penh. Suddenly your entire data pipeline grinds to a halt. Why? Because the moment you cross the invisible national border, your legal framework changes. In Indonesia, you may face data localization rules, meaning personal data must stay within the country. In the Philippines, you might be required to use binding corporate rules or models contracts for transfer. In Vietnam, you need prior approval. And in Singapore, you're fine provided you meet PDPA adequacy. Same ASEAN, different universes. Now let's visualize this. Imagine trying to build a single regional highway, but every country insists on using a different rail gauge. The train can start strong in Singapore, but derails at the next border. That's exactly what's happening with fintech data right now. So who suffers most from this complexity? Not the large, well-funded fintech. They have compliance teams and external counsel. It's the SMEs, the startups, the innovators, the very people driving 90% of our fintech creativity. They can't afford multiple data storage centers or legal mapping of 11 jurisdictions. So they scale back, they stop expanding. That's how regulatory fragmentation quietly kills innovation. Not with a single law, but with thousands small inconsistencies. To them, compliance isn't just expensive, it's existential. So when compliance becomes survival instead of strategy, innovation suffers. Let me illustrate this with a human story. Picture a migrant worker from Malaysia who moves to Thailand for work. He's responsible, hardworking, and has a strong digital payment record back home. Years of microtransactions, steady mobile top-ups, a clean e-commerce trail. Now he applies for a small personal loan in Bangkok. The Thai fintech company wants to approve it, but it can't. Why? Because their data, his proof of reliability, is locked in Malaysia. The Thai firm can't legally access it due to differing consent standards and localization laws. The algorithm can't see the full picture. So what happens? He's denied credit, not because he's high risk, but because the law says no data, no decision. That's not just a data problem, that's a human problem. Every time laws prevent ethical data flows, we are not just blocking transactions, we are blocking trust. Now let's look beyond ASEAN. When the European Union introduced the General Data Protection Regulation, the GDPR, it wasn't easy. There was resistance, confusion, and yes, plenty of fines. But the outcome, a unified and digital marketplace where data can flow freely, responsibly, and securely. One rulebook, one system of trust, one regional advantage. And that's what ASEAN needs. Not a copy of GDPR, but a cohesive ASEAN-tailored framework that allows interoperability among and without erasing sovereignty. So right now, because we debate which law applies others, the EU, China, even Africa, under the African continental free trade rules are racing ahead with interoperable systems. And here's the sobering truth. Every time we delay harmonization, we lose billions in potential digital trade. But even more than that, we lose momentum, innovation, and the chance to lead. So let me close this section with a question for everyone here. If data is the new oil, then what happens when every country insists on keeping its own oil in separate tanks? You don't get energy, you get inefficiency. Our challenge, therefore, is not just technical, it's legal and institutional. We must build pipelines of trust that connect economies without diluting our sovereignty. This is the essence of data governance in fintech, balancing innovation with protection, national interest with regional opportunity. And that's why this so-called regulatory patchwork isn't just a policy issue, it's the defining test of ASEAN's readiness for digital future. So we have just seen how fragmented regulation across ASEAN creates operational friction. But the legal patchwork leads directly to an even bigger issue, one that can quietly erode everything we build. It's not about code, it's not about compliance, it's about trust. Let me ask you, how many of you here have hesitated before clicking Pay Now or a new fintech app? Maybe you thought, what if my data gets stolen? Or what if this app isn't secure? That's hesitation. That split-second pause is the trust deficit. And in fintech, that's fatal. Because our entire digital economy depends on confidence. A confidence that when you spend money, it arrives. When you share data, it's protected. And when you save, it won't vanish overnight due to a cyber breach. Now here's the harsh truth. Globally, the financial sector remains the most lucrative targets for cyber criminals. These bad actors not attack randomly. They follow the data because that's where the value lies. And in 2025, the average cost of a single data breach hits USD 4.44 million. And for a young fintech startup, This is not just a financial loss, it's a death sentence. And it takes one breach, one leak, one headline, and months, even years of hard-earned trust vanish overnight. Investors withdraw, users uninstall, regulators descend, and the narrative changes from innovation to insecurity. Now, the issue isn't just about the technology failing, it's about perception. Consumers in ASEAN are savvy. They read the news, they see stories of stolen credentials, fake investment apps, phishing scams. They don't trust the black box. They don't trust what they can't see. Even the most technologically advanced fintech platforms can fail to win over customers if users feel unsafe. And that's why even today we see a cash online delivery as a preferred option in many markets. Think about that. In the middle of the digital revolution, millions still prefer handing over paper money or to a delivery driver instead of making a digital payment. Why? Because cash feels real and digital feels risky. So here's a provocative question. If we can't convince consumers that their data is safer online than in their wallet, have we really achieved digital inclusion? And here's where law meets psychology. In ASEAN, because of uneven regulatory landscape, a consumer's trust level often depends on where they live, not what platform they use. A user in Singapore might feel protected under PDPA, clear rights, clear recourse, but their friends using the same app in Laos or Myanmar might have no such assurance. So what happens? Confidence fractures. The consumer in one country trusts the platform, the other hesitates. And cyber criminals, they exploit the asymmetry. They look for weak links, for jurisdictions with weaker enforcement, and that's where they strike first. The irony is striking. One region, one platform, but 10, 11 levels of trust. This unevenness doesn't just slow adoption, it creates systemic vulnerability. And here's the consequences. Every breach, every misuse of data doesn't just affect one company, it weakens public confidence across the entire digital ecosystem. A breach in one country can cause a loss of trust in another. And that's why inconsistent governance can't just create inconvenience, it multiplies insecurity. Let's bring this closer to home. When a breach happens, it's not just data that's stolen, it's identities, livelihoods, sometimes even hope. A single cyber attack can expose someone's entire footprint, their salary, biometric ID, their transaction history. Imagine what that means for a young professional to suddenly see their e-wallet drain or retiree whose savings vanish overnight. This erosion of trust doesn't just hurt markets, it undermines the human promise of fintech, empowerment, access, and opportunity. So when consumers lose faith, adoption stalls. When adoption stalls, innovation slows. And when innovation slows, development stops. And that's how fragile the balance really is. So how do we rebuild trust? The solution lies in alignment, not just technology, but principles and perception. We must act on three fronts. Transparency. Consumers must see in plain language how their data is used, stored, and protected. The more visible, the better the protection, the stronger the trust. Education. Digital literacy isn't just about how to use an app. It's about understanding why one can trust it. We need public campaigns that mystify encryption, consent, and privacy rights, because an informed user is an empowered user. Enforcement. Regulators must not only set rules, but be seen to be enforcing them. When people witness visible, consistent accountability, whether through penalties, public advisories, or cross-border cooperation, trust grows. But let's be clear, unless we move towards a shared regional baseline for data protection, where every ASEAN citizen, no matter where they live, enjoys the same level of security, these efforts will remain fragmented, and fragmented trust is no trust at all. So let me leave you with this thought. In the digital economy, trust is the true currency. It's not Bitcoin, it's not blockchain, it's not AI, it's trust. Earned, protected, and never taken for granted. And when governance is inconsistent, that currency devalues faster than any crypto crash. So if we want ASEAN $2 trillion digital dream to become a reality, we must protect the one thing that cannot be coded, public trust. So we explored the legal fragmentation, we talked about the trust deficit. Now let's enter the most complicated and frankly the most human part of the story, the operational vortex. This is a soaring storm when technology, regulation, and human behavior collide. It's not about what the law says on paper, it's about what happens when inside a fintech firm, the real day-to-day battle between agility and accountability, between innovation and compliance. Let me ask you, what's the first thing a fintech needs to do before it can move money? Know its customer. Simple in theory, but in reality is one of the hardest things to get right. Every fintech in ASEAN is designed for speed and scale. And yet instant onboarding, one-click payments, real-time verification. Here's the paradox. The faster you move, the more attractive you become to those who want to exploit your system. Money launderers, fraudsters, mule account networks. They thrive in high speed, high volume environment. That's why anti-money laundering, AML, and know your customer, KYC compliance has become a nightmare of complexity. Each new customer requires a data-driven pipeline. Verification of identity, validation of source of funds, ongoing transactions, monitoring, cross-checking against international sanctions and watch lists. All of this must happen instantly because if your onboarding takes too long, your competitor gets the user. Now imagine what happens if your data is inaccurate or siloed. Your AI can't spot patterns. Your risk models flag false positive. And suddenly your compliance costs skyrockets. Or worse, you miss a red flag and face a multi-million-dollar penalty. And here's the tough question. Can we really call it innovation if our systems can't guarantee integrity? Because the truth is, when data governance is weak, compliance doesn't just become expensive, it becomes existential. Now, let's talk about the second vortex. Classification uncertainty. Raise your hand if you ever heard a debate on whether cryptocurrency is a security, a compliance, a commodity, or a payment instrument. Exactly. No two regulators will give you the same answer. Across ASEAN, regulators are still wrestling with how to define and govern digital assets like tokens, NFTs, and DeFi instruments. And the classification isn't a mere academic exercise. It determines everything. Which regulator has jurisdiction, what disclosure rules apply, and what kind of data protection and reporting are required. If a token is treated as a security, it triggers capital market regulations. If it's classified as a payment instrument, it falls under banking supervision. If it's considered a commodity, it may escape both for now. So fintech founders are left in limbo. So should they innovate now or risk falling foul of future laws? Or wait for clarity and watch their competitors from the US or EU eat their lunch? This uncertainty is slowing investment and stifling innovation in one of the most exciting frontiers of fintech. Decentralized finance. Think about it. ASEAN has the talent, the infrastructure, and the use cases to lead the DeFi revolution. But without clear, consistent definition, the lawyer says maybe. The compliance team says not yet. And innovation quietly stalls. And that's how opportunity slips away, not with resistance but with hesitation. So the governance gap, how do we escape this vortex? The answer lies in agile data governance, a mindset where compliance evolves fast as technology does. Let's take blockchain as an example. It's the greatest strength, it's also the greatest regulatory headache, immutability. Once a transaction is on the chain, it's there forever. But what happens when a regulator says delete that data? You can't. That's not how distributed ledgers work. That is where all compliance models built for centralized databases simply break down. Fintech needs governance that can flex, not freeze. That's why we're seeing the rise of RegTech, AI-powered systems that automate compliance in real time, detect anomalies, flag suspicious transactions, and learn as they go. But here's the catch, even the smartest RegTech is only as effective as the clarity of the law is built upon. If the rule book is vague, the algorithm is blind. So again, we return to governance, not as red tape, but as an enabler of innovation. Because agile, clear, predictable rules don't slow innovation, they accelerate safely. Now let's be honest, even the best system fails without the right mindset. The third layer of this vortex is not technical or legal, it's human. Inside many organizations, compliance is still seen as a box to tick, an administrative chore to satisfy the regulator, but that mindset is dangerous because poor governance rarely starts with bad technology. It starts with people, departments that hoard data, teams that resist change, leadership that treats data ethics as optional, When we treat compliance as an obstacle instead of a competitive advantage, we weaken not just our security but our credibility. So how do we change that? It starts with leadership. We need CEOs and general counsel to stand up and say, data governance is not a cost center, it's our license to operate. It continues with culture, training our teams, rewarding ethical data use, creating cross-functional data stewardship, unites that connect legal, tech, and business. And it ends with the incentive alignment, linking good governance to performance, promotion, and even investment outcome. Because the market has changed. Investors now ask not just how fast can you scale, but how responsibly can you scale. In today's fintech world, governance isn't the fine print, it's the headline. So we stand at this intersection of law, technology, and human behavior. Let's remember, compliance is not the enemy, it's the oxygen that keeps it alive. When we embrace governance, and as a growth strategy, not bureaucratic burden, we future-proof ASEAN's fintech ecosystem for the long game. Because at the end of the day, innovation without integrity isn't progress, it's peril. So we have a few solutions here, and due to the lack of time, I'll just briefly go through them very quickly. The first is, of course, harmonization through DEFA, which is the Digital Economic Framework Agreement. So the DEFA framework provides a blueprint for a single digital market, and it's being developed by ASEAN to ensure that we have a single digital market where all the 660 million customers are able to access with minimal regulatory and friction for responsibly governed fintechs. It also results in cost reductions because common standards are now being used in order to reduce compliance costs of 20 to 50% for cross-border operation. And of course, the major economic impact, because DeFi could actually double the region's potential digital economy to $2 trillion by 2030. And solution number 2 is we need to have an innovation-first regulation mindset. So we have regulatory sandboxes, and instead of having rigid regulations which are being imposed by the monetary authorities or the authorities governing fintech, we can have a system where we have safe spaces for testing new products with limited compliance requirements, getting real-world data, and also before launching it on a full-scale launch. We can also ensure that there will be RegTech solutions, which is basically regulatory technology which uses AI and data analytics to automate compliance and also manage risk. In this regard, this transitions from manual to automated compliance will provide regulators with the data needed to draft smarter regulations going forward. Solution number 3 is data as a shared asset. So open finance, strategic value, interoperability, and better service and data stewardship are some of the areas in which we could manage to look, we could actually try to develop so that we can look at data as a shared asset instead of all of us just keeping it as a silo property. And finally, there are 3 pillars for ASEAN's digital future which we need to focus on, which is firstly the importance of having policy agility, which is basically to ensure that regulators must move faster than technology and foresight, not catch up, and not to just play a catch-up game. And finally, secondly, we must be able to invest in trust, security, and consumer protection, of course, offer competitive advantages, and to maintain this trust, give our vast users a lot of confidence. And finally, regional unity. There's a need to have platforms like what we have today, the ASEAN Conference on Emerging Technology and DeFi, the Digital Economy Framework Agreement momentum to enhance and help to harmonize legal and governance landscape. So, in other words, in conclusion, is governance a barrier or a foundation? So my conclusion for my talk today is we should not look at governance as a bureaucratic burden, but actually as the de facto, the most important consideration to enable that the fintech technology would be able to march forward. And with this, I end my presentation. Thank you, and Rebecca, take it.
Thank you very much, Mr. Looi, for that informative and insightful presentation. We truly appreciate your contribution to this conference. So we reach to our Q&A session. If you have any questions, please kindly ask to our speaker. We would like to allow only one question. Since the time is limited, so we would accept only one question.
Thank you very much, Mr. Teck, for your insight. So since the organizer only allowed for one question, so I would like to ask you about the regulatory sandbox that actually apply in Singapore and how it actually works. Like, is it like a there are filling platform to supervise all those new innovation, or is it like an actual environment that allow the innovator to actually test their product?
Yeah, thank you very much for that question. The regulatory sandbox actually is it's a very good innovation which has actually been produced and developed by the authorities to monitor the kind of regulation which they should be developing in order to evaluate and also to control the development of fintech businesses. So instead of having regulations which are developed before the fintech consequences and the effects of the businesses are known, so what's happening now is that the regulators will work together with the fintech developer in a safe space where they would be able to be informed of the data, the consequences, and also the effects of their new businesses on the markets. So they'll be looking on it on a phase basis, and then as they go, they'll so-called develop the relevant regulatory governance and rules that may be required to control and monitor that particular fintech. Instead of trying to preempt what those regulations ought to look like, even before the fintech has been implemented in the market. So this regulatory sandbox is a very good, safe, and innovative instrument, or rather way in which the authorities work with the businesses to have an environment where they can basically agree on what the best rules and governance ought to apply for that particular fintech business. So I think in ASEAN there's more than 50 over regulatory sandbox which have already been created and developed, and it's going on very well. And at the end of the regulatory sandbox, some of the authorities will collect those data and discussion which they have, and then use that as the basis for implementing more rigid rules and regulations. So the regulatory sandbox is quite critical in the development of fintech businesses. We should not get into a situation where we try to develop the regulations first without knowing what the fintech business is going to bring an impact on society. And neither should we let the fintech businesses operate, have all the consequences, and then after do a post-mortem kind of a step to determine what those regulations ought to be. So this regulatory sandbox is basically like a middle path where they can come together, share information in a very safe environment, so that even if, let's say, there might be some issues, but because they are advising the authorities will also give them their feedback, and then they can so-called make the necessary adjustments during that period in which the regulatory sandbox is being implemented. So it's a system of regulation and governance development which is highly effective and very pragmatic, given the nature in which fintech is evolving and moving. And usually when the fintech business is being implemented, the technology is also changing whilst it's being implemented. So sometimes it might not make much sense for the authorities to try to preempt or even do a post-mortem kind of a regulation governance. So the best is really to work together with the fintech business and then analyze and then align with whatever technological businesses is going on there. So that way I think it builds confidence in the business. It also gives confidence to the public as well, because they know that the regulation government will come on board. It's going to be aligned with what's happening on the ground, and also maintain best international practices as well. Thank you.
Thank you Mr. Looi for your concise presentation. Please stay on the stage, and I would like to invite Dr. Nali to hand on the gift to our keynote speaker. Now it's time for our coffee break. Please enjoy your coffee and take a short rest. And please go back. We have 20 minutes, so we will continue